Hello everyone, welcome back to Sumit Crypto channel. So today we will talk about the Bitcoin daily chart and we will resume our discussions from the last week on 27th of December when we talked about what's going on in the market on daily chart basis, and we will resume our conversation from there. So while discussing the same thing on Saturday last week, there was few candles that were forming, and of course these two were candles on Saturday Sunday with lot less volatility and volume. And on Monday when the market opened, the US market opened, there was one more dash towards the level of 91,000, which was rejected by the market. But during this time we saw that this down channel has been breached by the market, at least on the daily basis. Then on Tuesday, Wednesday, again there was sideways movement, but we were still boxed in this rectangle of 85 to 91,000 kind of levels there. And somehow during this 1st of January on 2026, we saw, and the next day as well, we saw some price activity going on which breached the box on the upside. And of course we are currently at 91,268, and this is the level at which we'll have to make a decision, because this down channel has been breached, this rectangle has been breached, and at least on closing volume, I think it's Sunday today, and it's showing that it has crossed this box. Of course with low volumes on Saturday Sunday we don't take it very seriously, but at least on the charts it is seen that it is been breached here. So this megaphone down channel is again into play right now. We can see it is taking resistance here. So let's go back and see the volumes here again. It's again showing the same thing that we discussed last week as well. The downtrend volumes were high. Since then there is a volume around 15,000 per day kind of average, which is half of the average here, and it's quite low except for this candle which triggered a lot of shorts on the upside. Again the volumes are low here. To look at it at a better level, to understand it better, let's do it by breaking this into two parts. This triangle here and this triangle. So after the 80,000 kind of supposedly bottom, and during this zone the volume was 18,000, and this has again narrowed a lot at around 13,000 on daily basis. It's a very low volume by all means. We have shown historically as well, even during this consolidation period the volumes were not as bad as this volume in last 20 days that you have seen here. And why it is important, we'll have to take some historical perspective here. We'll see at the topping of Bitcoin market during the 2019 kind of markets here. So during that time as well, we see a lot of volume spread analysis that was happening when market actually topped here at 11,000, 13,000 around in around July. And with each swing that it took, which was around 15-20%, there was a volume which was descending, which was going down as well. We formed this triangle, this descending triangle pattern, in which we hit the bottom again and again, and eventually broke down from here with high volumes. And while we were looking, there were few spikes, but all these tops were actually made during the local peaks of the market here, like here, here, and here. They were all with accompanied with high volumes. Then of course we drifted down back to the levels of 6-7,000. It was a good drawdown from 13,000, more than half, and then we made a bottom pattern here, and this bottom pattern was like famous, what you call uh, inverted head and shoulder pattern, here, 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 and eventually we broke out. So during this pattern as well, we saw volume distribution which was not bearish but bullish. All these volume spread over here were bearish in nature, but when we reached to this stage where we formed the head and shoulder pattern, there was spike when the markets were going up, upswing, and low volume during the correction, again high volume, low volume, and when we break out from here on this level, then we see spikes of high volume which eventually took the market to new high. Not new high, but at least out of the woods of 6-7,000 kind of levels here. So that's why it is very important for us to understand how the volume is working here. Here the volumes are not very convincing, honestly speaking. I would like to see much better volume spread here, which is still not happening. We cannot say that it's a accumulation zone that we are observing right now. So let's clean up this chart bit to understand it in a better way. Now we'll look at one more thing which is playing an important role here, that is the 50 days exponential moving average. So at this point of time, Bitcoin prices have just hit the 50-week moving average, which is an important part to understand. If we look at the past, whenever there was an upswing, 50-week moving average provides support, and during the downswing it provided resistance. Again, on the upswing, it was there to support the market price, and since then, before the breakdown here, it has first time touched the 50 days exponential moving average. Now I have all the reasons to believe that this market must show resistance to this 50 days moving average, at least at this instance. Probably it has to, if it has to break up from here, it will have to do some consolidation before it actually breaks out if we are bullish. But on the first touch, it has to come down, taking a resistance with 50 days moving average here. So that is my base case. I'll observe this level very closely. Now we looked at the triangle formation before, when we discussed our positions last time. This was made with the ups and downs, what you call lower high, higher lows, and we discussed that we need to see the resolution of this triangle sooner than later, where we were anticipating that it will be resolved by 1st or 2nd or 3rd of 1st or 2nd of January, but it is still there. 3rd and 4th, which is Saturday Sunday, we said we do not like to see any action, and we do not want to take any action of price action around these 2 days because of the weekends and tepid volumes. Now we are at this part wherein we will have to see some meaningful movement either upside or on the downside here, because the symmetrical triangle theory says that it cannot be unresolved for a good long time, at most at the 75% of the what do you call 75% of the length of the triangle, which is like at like fifth or sixth, it has to resolve one way or the other. So that is what we are going to observe. We have two resistance, overhead resistance for Bitcoin right now. To take the discussion further, which I think you must have known about, which is the CME gap. Now, Bitcoin futures market on CME exchange closed at 90,200, and during the weekend, Saturday and Sunday, we are at 91,30, 350 around levels. Now we know that in the past, CME gaps are meant to be closed, whether it will take 1 day, 1 week, or 1 month. So we think that it has to show some traction, and since we are at a point of formation wherein it has to act fast, this makes us bearish, assuming that this gap will be filled sometime in the coming week. That means breakout may not happen, and we may drift back to below the CME gap and towards the lower end of the triangle here. So that is the base case that I think the three things that are working against the Bitcoin right now, the charts right now. And but let's discuss the bullish scenario. This is also important. Now in the past we discussed about, like I think 2-3 videos back, we discussed about this pattern which may come into picture. We extrapolated this thing on the Bitcoin chart, and we said somewhere it will sweep the 80,000 levels, trigger few stop losses, and will head back towards it. That was our discussion that time. It did not happen. I mean, it did not sweep the 80,000 levels, and it is heading towards the upper part of the triangle here. That can be taken as bullish. And if this bullish case has to happen, then in that case, first we will place a resistance line, the next resistance line for Bitcoin, which is around to be 95,000, and the possible bullish path from here could be something like that. And in that case, the symmetrical triangle theory will not be applicable, and we may see a ascending triangle bullish reversal pattern here. That means if it breaks out from here today, tomorrow, day after tomorrow, it will show a first resistance towards 95,000, let's say profit booking at this point of time, come back to the megaphone down line, and of course the CME gap, fill it up and zoom back and break it on the upside. Now again, as we calculated last time as well, if this triangle is, let's say, 90 days triangle, then we would expect this triangle to be broken out around 60 days, which is like around 20th of January. We may see a breakout happening on the upside, and that is the bullish scenario. I would not put more than 30% probability on this pattern right now. I think Bitcoin does have some unfinished business on the downside before it can resume on the upside. So I will try to keep it only to 30% probability, but we will look at the price action closely before we decide upon the things. Now, and if we observe that we find resistance here because of whatever discussions I talked about, and symmetrical triangle would be the case here, then we may see a bullish pattern in which there would be a breakdown from this level, filling up the gap, coming back and touching here, consolidating and resuming its journey towards 80,000. Now this has to happen if symmetrical triangle is valid, this pattern has to happen very rapidly, let's say by Monday or Tuesday, because as long as we keep moving towards the apex of this triangle, I will be more skeptical to take positions on the downside if it's just languish without any direction. And that is the path which I think it may take. This is a very crucial level for many reasons, and I would put 60% probability to this to happen, the bearish case here. Still, it is very valid. Everything that we have seen is happening in the weekends, which we do not take very seriously. And of course 10% is attributed to something that we don't understand. I mean, it may just go sideways, all these patterns are nullified, or they could be like a lot of volatility for whatever reasons, so we don't know about that. So yes, that has been my bullish case and bearish case so far. Keep your powder dry. I think we will have a good directional trade coming up very soon. If you are skeptical about being a bullish, then take a lighter positions and keep building on the upside. But we have a lot of overhead resistance going forward for the bullish, for the bulls, that is for sure. And if you are bearish, then probably you would like to see the breach of 87,000 again before taking a swing downside towards 80,000. So that's it from my side, guys. Thank you for being a part of this thing. Please like the channel and subscribe to it, and I'll be coming up with the weekly chart video tomorrow, where we'll discuss about many other things which is relevant to the weekly charts only. So thank you. Have a good day.